Right. Okay, Lamai. Today, my focus is to complete that government intervention to pre-market. Okay, Lamai. Government intervention to pre-markets. I think you can hear me. Kalana, Dipna?
Yes, sir.
Okay.
Yes,
Dipna?
sir.
No issue. Right. Okay, Lamai. Right. Lamai, we have been studying our pre-market economic system, right? Demand, supply, equilibrium, elasticity, everything. I think for more than 2 months now. Okay, right. Lamai, when talking about price mechanism, you know that price mechanism is, yes, it's a very good mechanism to allocate scarce resources among, you can say, alternative users, right? It's very effective method, right? Scarce resources are distributed very effectively by price mechanism. Okay, the lamai, that you know that equilibrium price, quantity. Okay, the lamai, this price of a good or service is determined by demand and supply forces in a free market. Get the point? And these equilibrium price and quantity are subjected to change anytime. Okay, the lamai. So yeah, now you have already learned, okay, how pre-market economic system or demand and supply force worked. Okay, but Lamai, sometimes remember, this free market or demand and supply forces or free market or price mechanism, that is the word, price mechanism may not be fair. You get the point? Price mechanism may not be fair. Sometimes it creates some inefficiencies, it creates some barriers, or we can say market failure in the economy, right? Example, Lamai, assume uh, price, right? The not rise, not only rise, any product, Lamai, the price is determined by demand and supply forces. Okay, the Lamai, price determined by demand and supply forces. So sometimes, Lamai, assume, for example, listen, Lamai. Right. It's not working, I think. But anyway, Lamai, this sometimes lamai this price mechanism creates some inefficiencies. Example lamai, for example, assume price of one rice unit is 400 rupees lamai, right? Price of one rice unit is 400 rupees. It's too much lamai. Okay, the price mechanism has uh, determine a price for one rice unit which is 400 rupees lama, is 400 rupees. So it's not fair, because the rice is it's very essential product for everyone. So but the price mechanism has determined a 400 rupees lama, determine 400 rupees for one unit of rice. Then lama, it's too expensive. Okay, the Lama, we know that we have learned that price mechanism is effective. Yes, of course, Lama, right? Price mechanism is a good mechanism, right? Good, the good the strategy to allocate scarce resources. But Lama, sometimes try to understand what I'm saying. Sometimes Lama, it creates some inefficiency. Okay, the Lamai. Sometimes the market price, can be too high, too expensive. Sometimes market price could be too, cheap, or we can say very low. Okay, which is not good for producers. Lamai. You get the point. Sometimes lamai, like demerit goods like alcohol, cigarettes, okay, the lamai, and some demerit goods could be overconsumed lamai, right? Overconsumed, right? It's been too much consumption in the economy. So these are the sort of some negative consequences of price mechanism. Okay, what I need to say, Lamai, though we admire price mechanism is a good mechanism, a good strategy, good method to solve basic economic problems, Lamai. It creates some inefficiencies. You get the point, right? It creates some inefficiencies, or it may not be fair every time. Okay, the Lamai. So now, Lamai, the government has to intervene, right? Uh, when government feels our price mechanism is not working properly, right? Price mechanism has not done its job properly. Then Lamai, the government intervenes to pre-market. Understand the point, right? Government intervenes to the pre-market, right? This lesson is all about Lamai, how government intervenes pre-markets. Understand how government intervenes pre-markets. Are you okay, Dipna, Kalana?
Yes,
Yes,
sir.
sir.
Okay, right. Right. Let's move to the tute, Lamai. Right. Uh, you can see, Lamai, it says pre-markets allocate scarce resources, pre-market allocate scarce resources and allow the market forces of supply and demand to run the economic system to the price mechanism. Yes, you know this point, Lamai, right? To the price mechanism. To the price mechanism. To the price mechanism. Lamai, give me 1 minute. 1 minute. Right, listen. Then it says, Lamai, however, today government intervene in the market when exchange and solutions of the market equilibrium. When exchange and solution of the market equilibrium uh, are not be fair, okay, the line to the society, both socially and politically, right? Government intervenes to free market. Right, government intervenes are done with expectation of maximizing economic social welfare of the country. There are various means of government intervention. This is our focus actually, right? We are going to discuss these four, the ways of government intervention. Now I write down first one. uh, Imposing indirect taxes. First one is imposing indirect taxes. First one, imposing indirect taxes. Imposing indirect taxes. Imposing indirect taxes. Imposing indirect taxes. Second one, Lamai, subsidies. Providing subsidies. Third one, Lamai, price control policies. Price control policies. Price control policies. Last one, Lamai, price control policies. Fourth one, price stabilization, or we can say income stabilization. These are the four in your syllabus, Lamai. We need to discuss these four areas. What are the four areas, Lamai? Number one, imposing indirect taxes, subsidies, price control policies, price or income stabilization. Okay, the Lamai. Remember, these are the ways of government intervention. Government intervenes free market, okay, in these ways, Lamai. These are the methods, okay, the situation where government intervenes free markets. You get the point, okay? When government feels free market system or price mechanism is not fair sometimes, Lamai, the government intervenes. These are the main areas where government markets. Get the point, right? Number one, imposing indirect taxes, subsidies, price control policies, and price and or income stability. Get the level, right? Next one, imposing indirect taxes, right? Now, what do you know about taxes? Can you tell me? Dipna, Kalana, what do you know about taxes? What is mean by a tax? Kalana, what is mean by a tax, Lamai?
It's like a payment to the government.
Sorry, Puta, can you?
It's like a payment.
Payment. To whom?
Government.
Government. Okay. Dipna, what do you know about tax?
Is the main income of government.
Yes, very good. Yeah. Okay, the lamai. Without this, tax is a very wide topic. It's a big topic. There are 100 varieties of taxes in Sri Lanka, lamai. This is a big topic. Taxes. Okay, the lamai classification of taxes and all. You have a separate lesson for taxes, lamai. It's chapter 8. Okay, one part of chapter grade 13. Uh, we explain, right? We discuss taxes in detail. Okay, the lamai. Right. Here, lamai, we are not going to explain all taxes, lamai. Right? We don't need all taxes. Right? Remember, we need only lamai indirect taxes part. We need only indirect taxes part. I'll just explain lamai what are the taxes in Sri Lanka in brief, right? Listen for a while, lamai. Uh, Mainly, lamai, there are two taxes. Remember, right? Mainly, there are two taxes. Number one, lamai, direct taxes. It's a small introduction for taxes, right? Taxes mean, lamai, tax means a legal payment, right? That everyone has to pay, right? If you are imposed, right? If you are asked to pay a tax, lamai, by the government, you cannot avoid paying taxes. You have to pay taxes. So taxes are called legal payments. Legal payments are legal payments, right? There are two parts of taxes, lamai. First one, direct taxes. Other one is indirect taxes. Remember, direct and indirect. What is the difference between direct and indirect, lamai? Any idea? No, I'm just asking, lamai, right? I'll explain. Alana, direct, indirect.
Direct taxes means it's compulsory for us to pay for the government, and
Yes. Yeah. Okay, the lamai.
indirect means
Yes. Okay, listen. Good. Now, my direct taxes means, remember, direct taxes mainly imposed by the government based on these are the tax base. Number one, individual income, property, company tax, sorry, the company profit. Okay, the lamai. So, normally we say indirect taxes are imposed by the government on income or wealth. Income or wealth. Income and wealth. Okay, the lamai, income and wealth. The best example, lamai, sorry, examples for the indirect taxes, sorry, direct taxes. Number one, lamai, income tax. Number one is income tax. Income tax. Okay, the lamai. Then second one is corporate tax, lamai. Corporate tax. Property taxes. Property taxes. Property taxes. These are the examples. These are the examples for direct taxes in Sri Lanka. Remember, direct taxes are imposed by the government, remember, on wealth or income. Wealth and income. Okay, the law, right? And other main property, okay, of main the direct taxes is lamai. these direct taxes cannot be shifted to another party. Did you get the point? If you are liable to pay, right? If you are asked to pay, let's say 100,000, right, on your income by the government, lama, you have to pay. You get the point? The disadvantage or burden of the tax lies on your shoulders, lama. You get the point? You cannot shift this tax to another party, right? So these taxes, remember, in direct taxes cannot be shifted, Lamai, but cannot be shifted to another party. Cannot be shifted. Cannot be shifted. Cannot be shifted to another party. Here, Lamai, another party mean actually final consumer, right? Final consumer. Are you okay, Lamai? Indirect taxes are the taxes, remember, imposed by the government on goods and services, Lamai. That is the point, right? On which one? Goods and services. Indirect taxes are imposed on goods and services. Goods and services. Goods and services. These are the examples for indirect taxes in Sri Lanka, Lamai. Number one, VAT. Value added tax, you might have heard. Value added tax goes to indirect tax part. Other one is lama excise duties. Okay, the lama excise duties. Okay, the lama tariff. Tariff mean lama is a tax imposed on imported goods and services. Imported goods. Lama. Did you get the point? Tariff. Okay, it's the imposed by the government on imported goods. Tariff. All these taxes, indirect taxes, are imposed on goods and services. Goods and services. Remember. And Lamai, these indirect taxes can be shifted to a final party, Lamai. Right? Can be shifted. Indirect taxes can be shifted. Can be shifted to another party. Another party mean Lamai final consumer, to the final. Okay, the Lamai. Example, Lamai, if 20% tariff is imposed on imported vehicle, Lamai, that the tariff amount, the 20% tax amount, finally added to the product price. Finally added to the product price, final consumer has to pay the, that increased amount. Clear? So this is called that's why it says indirect taxes can be shifted to a final consumer. Did you get the point? Right? Example, Lamai, assume original price of imported car, let's say 8 million. Just imagine 8 million. Then government imposes an indirect tax, or let's say tariff, Lamai, which is 20%, right? 20% tax. Tariff is 20%. 20% mean how much, Lamai? 1/4, right? 1/4 mean 2 million. This is the tax amount. Is the tax amount. It means importer is liable to pay. Importer, the person who imports this vehicle from, let's say, Japan, is liable to pay, legally liable to pay how much? 2 million to the government. Okay, but uh, what importers do is, Lamai, they add this the tax payment to the final product price, the final price of the product. Lamai. Then this car will be sold at 10 million, Lamai. Remember, this car finally is sold at market at 10 million. Understand? Okay, the Lamai. Then here finally, Lamai, you can see this tax amount has been added to the final product price. Okay, the Lamai, final product price. Then finally, consumer has to bear the tax burden. Let's call actual tax burden, Lamai. You get the point, right? So here the buyer or final consumer has to bear the tax amount. You get the point. Okay, so remember, The main difference between direct and indirect lamai, direct taxes cannot be shifted to another party. Indirect taxes can be shifted to another party being final consumer. Clear the lamai. වැටුත් එහෙමනේ ළමයි. අර ඔයාලා දැකලා ඇති ඔයාලා මේ අර දැන් ඔය බලන්න බිල් එකක් අරගෙන වැට් එක ළමයි කන්සියුමර් තමයි පේ කරන්නේ. ක්ලියර්? දැන් හිතන්නවා මොකක් හරි ප්‍රොඩක්ට් එකක් ගන්න අපි කියමු ඉතරට එකක් කියලා ළමයි. ටීවී එකක් ගන්නවා ප්‍රොඩක්ට් ප්‍රයිස් is 50000. නේද ළමයි? හැබැයි ඒකේ වැට් එකක් තියෙනවා. තව අපි කියමු 5000. එතකොට ඔයාලට 50000 ගෙවලා ඒක අරන් එන්න බෑ ළමයි. 50000 ප්ලස් අර වැට් එකක් ගෙවලා තමයි එන්න ඕනේ. කියන එක ක්ලියර් ඇති ඔයාලට. හොටෙල් එකකට යන්න ළමයි. ඒකෙත් වැට් එක ඔයාලට ගෙවලා තමයි එන්න ඕනේ. කියන එක තේරෙනවද? ඒ කියන්නේ අර මේ finally this the tax amount is paid by consumer. These are called indirect taxes. Direct taxes you cannot do that. Example, assume okay, if government imposes 20% income tax on Kalana's income, Kalana cannot say no, I'm not going to pay this tax. Okay, I'll shift to this. Okay, my tax will be paid by another party on behalf of me. No. Okay, the lamai, you have to pay the tax. Okay, the burden, disadvantage, burden lies on your shoulders. Ipna, Kalana, are you okay, Puta?
Okay, sir.
Okay. Ipna?
Yes, sir.
Okay. Right, Lamai. But remember, Lamai, do you need to write this down? You won't write it down. I think it has not been given in the queue. This lesson, Lamai, remember in market intervention, government intervention part, we discuss only indirect taxes. Only indirect taxes, not the direct taxes. That's why I told you at the beginning, Lamai, we are not going to pay our attention on all taxes. All taxes, no. For this lesson, Lamai, we need only indirect taxes. Need indirect taxes. Shall we move on, Lamai?
Okay, sir.
Okay. Alana?
Okay, sir.
Right. Right. Read this point, Lamai. Imposing indirect taxes. Now you know what indirect tax is. Can you read it, Lamai? What imposing indirect taxes? What is an indirect tax? Indirect taxes are levied by the government on highlight lamai on what? Goods and services. On what? Goods and services. Indirect taxes are imposed by the government on goods and services, as I told you. Even though legally the tax is enforced on producers, producers are able to shift. That's I told you. Producers are able to shift the tax amount, shift the tax burden to the third party. Third party mean lamai final consumer. Itna. Final consumer. Person who buys the products. Okay. Example. These are the examples in Sri Lanka. These are the examples. Number one, value added tax. Number one, value added tax, VAT, excise duties. Excise duties are imposed by the government on especially alcohol, cigarette, motor vehicles. Okay, another example. Excise duties and tariff. Okay, Dalamai. Indirect taxes can be implemented on producers and buyers, but in our lesson, our focus goes to only taxes on producers, Lamai, not on buyers. Mainly based on two types of rate tax, Lamai. There are two types of. It means government can impose indirect taxes in two ways, Lamai. Number one, right now, specific tax. What is first one, Lamai? Specific tax. Or we can say unit tax. Both are same. Specific tax or unit tax. Second one means Lamai ad valorem. Second one is, what is second one? Ad valorem tax. Give me 1 minute, Lamai. Right? First one is specific tax. Second one ad valorem. And okay, the Lamai. These are the two parts of indirect taxes. On producers, not on consumers. In your level, we are not going to focus taxes on buyers. Okay, this taxes on. Are you okay, Lamai? Shall we move on?
Okay, sir.
Okay, right. Next point, Lamai. The difference between unit tax and ad valorem tax. Am I right? Unit tax. Unit tax, often referred to as a specific tax, is a levy mean tax imposed on highlight lamai a per unit basis. What? A per unit basis. Remember the lamai means lamai this I mean the unit tax or specific tax is imposed on based on number of units lamai. It's a specific amount, right? Fixed amount. Example, a tax of 50 on 500 milliliter sugary drinks lamai. Say Coca-Cola lamai. Okay, the lamai. It's mean government asks producers. Okay, you have to pay how much lamai? 50 rupees tax on every 500 milliliter sugary drink lamai. If you sell or produce one unit, you have to pay 50 rupees to the government. Okay, the lamai. So the basis is unit lamai. 1 unit. If 1 unit is sold, 50 rupees has to be paid to the government. Okay, the lamai. Second one, a tax of 100, sorry, tax of 100 per 20 pack of cigarettes, lamai. You get the point? Then here tax is a specific lamai, fixed amount, right? If a 20 pack of cigarette is produced or sold, okay, the lamai, producer has to pay how much? Fixed amount, 100 rupees to the government. That's called fixed, sorry, specific or unit taxes. Ad valorem mean lamai, it's not the fixed amount. Remember, ad valorem tax is a percentage. You get the point? Ad valorem tax is a percentage. Example, 18%, 10%, like that. 10% of price of the good. 18% of price of the good has to be paid to the government. Clear? Okay, the lamai. Ad valorem tax. Ad valorem tax. Put a star mark and write down lamai. Ad valorem tax. It is imposed, is levied, or we can say imposed as a percentage now. As a percentage. As a percentage of value. Percentage of value. Percentage of value. Right? Example, lamai. Let's say 18%, 18% VAT on we can say lamai what? Production of sugar or something, lamai, anything, right? What I need to say, lamai, here is a percentage. What is that? It's a percentage. That is the main difference between VAT, sorry, ad valorem and what is other one, lamai? Unit tax. Unit tax is a specific amount. හරියටම ගාණක් කියනවා ළමයි. 100 rupees per unit. මෙතන එහෙම නෙමෙයි ළමයි. percentage එකක් කියන්නේ. ඔයාගේ total value එකෙන් මට 18% දෙන්න. එහෙම තමයි government එක. ඔයාගේ total value එකෙන් price එකෙන් sales value එකෙන් මට 40% දෙන්න. ඒ වගේ. අතන fix ළමයි. මෙතන percentage එකක් කියන්නේ. Clearද? Are you okay? කලන දීප්න?
Okay, sir.
Right. Lamai, in your syllabus, Lamai, remember, ad valorem tax is not going to be discussed in detail. Okay, the Lamai. Right? We don't focus much attention on ad valorem tax. Our focus is on this one, Lamai, is mean unit tax or specific tax. Clear, the Lamai? Right. Next one. Next one, Lamai, how does a specific tax affect market supply? How does a specific, can you remember, Lamai? We discussed subsidies and taxes, right? Lamai, did we discuss subsidies and taxes under demand, determinants of demand or determinants of supply? Can you remember the first point of the list? Alan? Taxes and subsidies. Did we discuss taxes and subsidies as a determinant of demand or supply?
Supply, sir.
Supply, very good. Kalana?
Yes, sir.
Supply, Lamai. Can you remember? Right? One the right, we have written some determinants of supply. One of determinants of supply is taxes, government, the taxes and subsidies. Okay, the Lamai. Yes. Then remember, Lamai, the taxes that we are going to discuss in your syllabus. Okay, the lamai is the tax which affects only supply curve. Tax affecting supply. So, lamai, these taxes are imposed on producers. Okay, the lamai. Right. By it, then lamai, this the impact of imposing specific tax can be explained by a table, by a graph, and finally by an equation. Right. Look at the point. Could I understand the point? Understand the logic behind the lesson. Then you can do any question. You can do any question. How does a specific tax affect market supply? Yes, Lamai. Market supply gets affected. Remember, market supply gets affected. Okay, right. Now look at this table given. This is a supply schedule. Supply schedule. The following table shows the prices and quantities supplied of a particular product. Right? Price for supply 50 units. The meaning of this point is listen, Lamai. Alan, suppliers are willing to supply 50 units at price 4. At price 4. We know, Lamai, this is the minimum expectation of supplier. Minimum expectation of supplier. In simple way, we can say, Lamai, if supplier is given 4 rupees, supplier is given 4 rupees, Lamai, suppliers are willing to supply how many units, Lamai? Okay, the Lamai. In other words, Lamai, we can say on the other way, we can say suppliers are willing to supply. Okay, the Lamai. Suppliers are willing to supply 50 units if they are given 4 rupees. Okay, this is called minimum expectation. Minimum expectation. To supply 50 units, supplier expects at least 4 rupees per unit, not for 50 units per unit. To supply 50 units, supplier expects minimum 4 rupees. Supplier will say, okay, buyer, right? Listen to me carefully. I'll give you how many units, Lamai? 50 units, but I need minimum at least 4 rupees per unit. Okay, the Lamai. Kalana, what about this point? Price 8 and quantity supply 100. This point means, Lamai, this point means that suppliers are willing to supply 100 units if they are given 8 rupees per unit. Lamai. Simple way, Lamai, we can say. In other words, to supply 100 units, Lamai, supplier expects minimum 8 rupees. Supply expects minimum, how much, Lamai? Supply expects minimum 8. Okay, the Lamai. Remember, this is called minimum expectation. Minimum expectation of suppliers. Minimum expectation. Minimum expectation of supply. Clear? Right. Now, Lamai, assume that government has imposed Lamai. Government has imposed a specific tax of 4 rupees on every unit of the product. Every unit of the product. Okay, the Lamai. Now, government is going to impose a tax of 4 rupees, Lamai. Unit tax, specific. Right. Look at the board, Lamai. Listen, lamai, before price before taxes, unit tax, price after tax, quantity supply. Okay, the lamai. To supply 50 units, listen carefully, lamai. This point is so important. To supply 50 units, lamai, supplier expects minimum 4 rupees before taxes. එන සප්ලයර් කියනවා ළමයි right මම 50 units sell කරන්න මට අවුලක් නැහැ මම දෙන්නම් මම අවුලක් නැහැ I'm ready to sell 50 units හැබැයි මට minimum ඕනි කීයක්ද ළමයි 4 rupees මට minimum මගේ අතට තියෙන්න ඕන 4 rupees නැත්නම් මම දෙන්නේ නැහැ it's a meaning now ළමයි government says if you sell one unit right government says to producers if you sell one unit you are liable to pay 4 rupees to the government. 4 rupees to the government. Okay, the Lamai. Now tell me, Lamai, do producers supply 50 units at price 4? Alan? Alan, are you there?
Yes, sir.
So the after 4 rupee tax, right? Do producers supply 50 units at same price, 4 rupees? Yes or no?
Yes.
Before tax, producers are willing to supply 50 units at price 4. Supplier expects minimum 4 rupees. Now government says, if you sell 4 rupees, sorry, if you sell 1 unit, I need 4 rupees. You have to pay 4 rupees tax to the government. Okay, the Lamai. Right, okay. Right, assume Lamai, producers are willing to supply 50 units, as Kalana said. Producers are willing to supply 50 units at price 4 even after the tax. Right, just imagine what. Now listen to what I'm going to say. Now 50 units are sold. Okay, the Lamai. At 4 rupees. Now Lamai, if they sell 1 unit Lamai, producer is liable to pay how much? 4 rupees to the government. එතකොට මේ ගත්ත 4 rupees නම් government එකට කීයක්? Clear? If 1 unit is sold 4 rupees at 4 rupees after the tax calendar, after the tax, okay, the Lamai, that 4 rupee has to be paid to the government because government has asked producers to pay 4 rupees, okay, the Lamai, on every unit. Did you get the point? So remember, after the tax, supplier is not willing to supply 50 units at price 4 Lamai. Get the point? Unit tax is 4 rupees Lamai. Now supplier expects his minimum price plus tax Lamai. How much? Now Lamai, this is the minimum expectation for 50 units. 4 plus 4, how much the value? Alana? 8. Now Lamai, supplier will say, okay, buyers or consumers, I'll supply 50 units, no issue. But I need minimum how much Lamai? 8 rupees per unit. Okay, the Lamai. Because out of 8 rupees, 4 rupees has to be paid to the government. Right? The net price received by producer is 4 rupees. Right? Here, 100 units will be supplied at price 8 before the tax. But now Lama unit tax is 4 rupees. Now Lama supply expects 8 plus 4, 12 per unit. Now Lama after the tax, to supply 100 units, supply expects 12. Okay, the Lama, that minimum expectation increases by the unit tax. Alan, are you okay? Dipna?
Okay, sir.
Okay, Dipna?
Okay, sir.
Okay. Then Lamai, price 12. To supply 150 units, Lamai, before tax, he expects 12. Now 12 is not enough, Lamai. He expects 12 plus 4, 6. After the tax, Lamai, suppliers are willing to supply 150 units, but Not at price 12, price 6. Here. Then here, how much? 20. Here, 20. Here, the lemon, 200 units. And complete the table. Complete the table given. We can say Lamai. The minimum expectation. Minimum expect. Minimum expectation of Halana, are you okay?
Okay, sir.
Dipna?
Yes, sir.
Yes or no?
Okay, sir.
Okay, good. Right. Okay, Lamai. Then we can say, Lamai, finally, in conclusion, if a unit tax is imposed, remember, a unit or specific tax is imposed, minimum expectation or the price that producer expects from the market increases by the amount of unit tax. You get the point, right? Now, Lamai, I'm going to show these impacts on a graph. By a graph. Okay, Dalamai. Right. Putta Kalana, Kalana and Deepna, can you draw the demand? The supply curve before tax and after tax on the space given. Before tax and after tax. Supply curve before tax and after tax. Price Q 0. Right. So okay, my price 4, 8, 12, 16, 20 and 24. Quantity lamai 50, 100, 150, 100, 150 and 300. Okay, the lamai. Right. Lamai, now draw the original supply curve. Original supply curve. How to draw it? At price 4, Lamai, suppliers are willing to supply 50 units before tax. Before tax. Before tax. To supply 50 units kalana, supply expects minimum 4 rupees. Okay, the Lamai. To supply 100 units, supplier expects minimum 8 rupees. To supply 150 units, Lamai, supply expects 12 rupees. To supply 200 units, supplier expects how much, Lamai? Before tax, huh? Before tax. To supply 250 units, supply. Am I correct, Kalam?
Yes, sir.
Okay. Then Lama, you can draw the supply curve by connecting these points. Uta, this is the supply curve before the tax. This is supply curve before tax. Oh. Okay, the Lamai. Now Lamai, supply curve after tax. Look at the board for a while. Now I'll give you time to draw it. If not, look at the board. Supply curve after the tax. Listen, Lamai. Now, Kalana, producers are willing to supply 50 units. Oh, okay, they are ready to supply 50 units, but not at price. Price 4. How much does producer expect now after the tax? Kalana?
8.
8. Okay, the Lamai. Now, Lamai, yes. To supply 50 units, supplier expects not Lamai 4, it's 8. Okay, the Lamai. To supply 100 units, now supply expects no 8 Lamai, 8 plus tax. How much? 12. To supply 150 Lamai, supply expects 4 rupees than before. 4 rupees. That this is the supply curve. This is a supply curve after the tax. This is a supply curve after the tax. Supply curve after tax. S2, this is called S1, this is S2. Okay, S2 mean supply curve after tax. Supply curve after the tax. Supply curve after the tax. Okay, Lamai. Then we can say, Lamai, listen me carefully. One more. It. Remember, Lamai. Look at the board. Ripna. What happens to original supply curve? Alan, what happens to original supply curve?
Shift to the left side.
Shifted to the left side. Vertically or proportionate?
Proportionate.
Proportionate or
No.
I mean,
Oh,
sorry, parallel or proportionate?
parallel.
Parallel, Lamai. These two curves are parallel. Okay, the Lamai. Look at the board. Put the vertical distance between these two supply curves. Vertical distance, right? Exact vertical distance between two supply curves equal tax. Tax mean 4 rupees. Look at here, Lamai, the gap between these two supply curve 4 rupees. Here, gap is 4 rupees, Lamai. Understand? So remember, the vertical gap between two supply curves equal tax, unit tax. Tax is 4 rupees. Okay, the Lamai. Then as a conclusion, Lamai, we can say market supply curve shifts to to the left. This is very important, Lamai, by the amount of unit tax. By the amount of unit tax. The amount of okay, Lama. If unit tax is 5 rupees, Lama, supply curve shifts to the left by 5 rupees. Lamai, I forgot to tell you. Put the arrow to the left side. Arrow shows the direction. Let me know once you are done.
Done, sir.
Done. Ipna?
Sir.
Ipna, are you done? Yes.
Yes, sir.
Okay, right, Lamai. Then table okay, graph okay. The next one is equation. We can show the impact of unit tax using an equation, right? Right, then graph is okay, Lamai. Next one. According to the graph, Lamai, put a star mark. I think it's, have you written that part, Lamai, that supply curve shift to the left side by the amount of unit tax?
Yes, sir.
Yes, Nipna. Here, the according to the above graph, you should say, we can say, Lamai, after the imposition of unit tax, no need, right? That the same part, Lamai, that uh, the I wrote next to the diagram, Lamai. Okay, supply curve shift to the left side by the amount of unit tax. Okay. Put a write down this point also. Second point, the vertical distance. The vertical distance. The vertical distance. The vertical distance between the vertical distance between two supply curves. Two supply curves. Vertical distance between two supply curves equals the amount of unit tax, equals the amount of the vertical distance between two supply curves equals to the amount of units. Okay, right. Second one by equation lamai. Uh, okay, lamai. This is the equation. Our original equation QS equals A plus BP, right? This is the original supply equation, standard form. Remember, Lamai, after the imposition of tax, this supply curve changes like this. QS equals A plus B, P minus tax, Lamai. P minus tax. P minus tax. Okay, the Lamai. This is, I'll explain why tax is adjusted like this. Okay, the Lamai. This is the supply curve after the tax. Okay, the Lamai. Supply curve after the tax. Okay, the Lamai. This is the equation. Write down. Equation is after the tax. Equation changes like QS equals A plus B minus tax, Lamai. Minus. Okay, the Lamai. Right. Example number one, assume the assume the supply curve of a particular product traded in the market is QS equals 200 plus 10p. If government imposes a unit tax of how much, Lama? If government imposes a unit tax of 5 rupees on this product, derive the supply equation after the unit tax, Lama. Simple. This original supply curve changes like this. Look at the bottom line. QS equals original supply curve 200 plus 10 P minus tax. Okay, the lamai. QS equals lamai 200 plus 10 P minus unit tax is how much lamai? 5 rupees. Then lamai QS equals 200 plus 10 into P, 10P plus minus minus 10 into 5. QSC equals lamai 200 minus 50, 150 plus, sorry, here 10P. 150 plus 10P. This is the supply equation after the tax. Okay, the lamai. Tax need to be deducted, lamai. Tax need to be deducted. Then 200 plus 10 P minus tax is 5 rupees. QS equals 200 plus the remove the brackets. 10 into P 10P plus minus minus 10 into 5 50. Okay, the llama. Then simplify the equation. The supply curve after the tax. Supply curve after the tax is 150 plus 10P. Okay, the color.
Okay, sir.
Right. Dipna. Right. Okay, Lama. Next point. Derive this supply equation, Lama. Example number 2. Do it yourself and tell me the answer. Assume the supply curve of a particular product traded in a market is US equal minus 100 plus 5P. If government imposes a unit tax of 10 on this product, derive the supply equation after the. Halana, what is new supply equation?
Minus 150 plus 5P.
Minus 150 plus 5P. Dipna,
Still doing, sir.
do it. Okay. Take time and do it. The new supply equation should be US equals minus 100 plus 5P minus tax. US equals minus 100 plus 5P minus tax is how much level? Tax is 10 rupees. US equals minus 100 plus 5 into 5, 5P plus minus minus 50. US equals lamai 100 minus 100 minus 50 minus 150 plus 5. This is the supply equation after that. Simple adjustment is there, lamai. What is adjustment? The tax amount need to be deducted from the price of the product. Okay, the lamai. Are you okay? Shall we move on?
Okay, sir.
Ipna?
Okay.
Right. Right. Could I take a small break, 5 minutes, and 5 minutes, huh? Not more than that. Take 5 minutes break and come. Refresh yourself. 9:15. Okay, the lama. I'll be starting at 9:15. Okay, lama. Right, okay, Lamai. Shall we start?
Okay, sir.
Ipna?
Okay, sir.
Right, okay, Lamai. Let's move into a full question, right? Full question, right? Next one is sorry. There's before that there's a small part. How does a specific tax affect market equilibrium? Very simple, Lamai. Right? Why does a specific tax? Sorry, how does a specific tax affect market equilibrium, Lamai? Lamai, this is your original equilibrium. Price quantity 0. This is a supply curve. This is your demand curve. This is the original equilibrium, Lamai. This is original equilibrium. Okay, the Lamai. So let's say this is equilibrium E1. Right? Equilibrium is E1. E1. Now, Lamai, assume the government imposes a unit tax. Government imposes a unit tax. Kalana, what happens to your supply curve? Original market supply curve?
Shift to the left side.
Shift to the left side. Sorry, this is assume original equilibrium price and quantity P1, Q1. Okay, the Lamai. Now, Lamai, after the tax or unit tax, your supply curve shift to the left side like this. Okay, and arrow the left side. Okay, the Lamai. Then you can say, Lamai, this is E2. Let's say this is new equilibrium, Lamai. Let's so this is equilibrium. Then you can see, Lamai, Alana, what happens to equilibrium price, Lamai? Alana, equilibrium price increased and Lipna, equilibrium quantity falls. Okay, the Lamai. But remember, Lamai, this is the very normal situation. Usually we can say, Lamai, generally, when unit tax is imposed by the government, equilibrium price rises while equilibrium quantity falls. But remember, Lamai, there are some exceptional situations as well. Okay, the Lamai. Though unit tax is imposed, Lamai, equilibrium price might not increase. Okay, there are some cases. Okay, the Lamai. Right. Generally, Lamai, we can say supply curve shifts side causing equilibrium price to increase while equilibrium quantity to decrease, Lamai. Okay, let's okay. Then Lama, you can say next to the diagram, you can write down the diagram. You can say after the unit tax imposed, okay, the Lama, equilibrium prices from P1 to P2 and equilibrium quantity falls from Q1 to Q0. Okay, Lamai, shall we move on? Are you done?
Yes, sir.
Right. Okay, Lamai. Example number 1. Example number 1. Right. You can do press 3 questions, Lamai. First one, then example number 1, the following the demand and supply functions are QD given, QS given, calculate the equilibrium price and quantity, you can do it. Price and quantity, you can do it, Lamai. Second one, draw the market equilibrium on a graph. Okay, I have given you a graph sheet, like a graph sheet. Okay, the Lamai. And last one, the third one, third part. Calculate the consumer surplus and consumer surplus, producer surplus, and okay, the Lamai. I'll help you to fourth part, Lamai. Part 4. I'll help you. Part 4, you can complete part press 3 parts, Lamai. Hurry up. Equilibrium price and quantity, graph, and consumer surplus. Hurry up, Lamai. I'm not going to help you. Right, Lamai. Equilibrium price and quantity. At equilibrium, QD and Q are equal. Right, okay, Lamai. First one, equilibrium price and quantity. QD equal QS. QD equal 500 minus 10 Lamai. QS minus 100 plus 10p. Minus 100 plus 10p. Okay. Then Lamai 500 uh, plus 100 equals 10p. 600 equals 20p divided by 20 divided by 20. P equals Lamai how much? Is 30. Right? Then you can calculate equilibrium quantity Lamai. QD equals 500 minus P. 500 minus 10 into price 30 minus 10 into 30, 300 units. 500 minus 300. This is the equilibrium quantity Lamai. Ipna Kalana, what same answers did you?
Yes, sir.
Yes, sir.
Okay, right. Then it's a graph Lamai. I think it's better to calculate maximum demand price and minimum supply price as well. Then you can draw it on the scale. Maximum demand price, QD equals 500 minus 10p, 0, 500 minus 10p, 10p equals 500 divided by 10 divided by 10, p equals 50 rupees. Right, minimum supply price MSP equals QS equals minus 100 plus 10p, 0 minus 100 plus 10p. Okay, the Lamai. Divided by 10, divided by 10, p equals 10. A equals 10. Second, next one. Uda, you can draw the diagram. Price and quantity. So, price 10 by 10 Lamai. 10, 20, 30, 40, maximum 50. Quantity demand, sorry, quantity, yeah, sorry, demand axis 100 by 100 Lamai. 100, 200, 300, 400, and 5. Here minus 100. Okay, Lamai. Then minus 100, minimum supply price plus 10, and equilibrium price 30 rupees and quantity 200. This is your supply curve, original market supply curve. And this is the demand curve 50 and Dipna, Kalana, are you okay with the graph?
Yes, sir.
Okay, Dipna,
Yes, sir.
Now, Lamai, calculate equilibrium. Sorry, minimum. Sorry, what is the next one? Consumer surplus and producer surplus. Consumer surplus and producer surplus. Third part, consumer surplus. Very simple, Lamai. Consumer surplus equals maximum demand price minus minimum equilibrium price into equilibrium quantity divided by, here maximum demand price is 50 minus equilibrium price 30 into equilibrium quantity. How many units, Lamai? Equilibrium quantity 200 units divided by 2. So answer is how much, Lamai? 2000, isn't it? Yes.
Yes, sir.
And producer surplus, equilibrium price minus minimum supply price, equilibrium quantity over 2. Equilibrium price 30, minimum supply price 10 into equilibrium quantity 200 units divided by 2. Lamai, answer should be same answer. Okay, the Lamai. Then they ask economic surplus as well, consumer surplus, producer surplus, and economic surplus. Lamai, economic surplus equals consumer surplus plus producer surplus. Consumer surplus 2000, producer surplus also 2000, and economic surplus should be, economic surplus should be, I think you're okay with these three parts now. Ipna, Kalana?
Yes, sir.
Okay.
Yes.
Right. Next question, Lamai. Now, assume the government imposes how much, Lamai? Now, government imposes a, what is that? Government imposes a unit tax of 10 rupees, Lamai. Government imposes a unit tax of 10 rupees. Unit tax of 10 rupees. Now, press question ask. What is press question, Lamai? Part 4, question number 1. Show the new equilibrium situation on a previous graph. Puta, look at the board. Look at the board. Right. This is the graph, your original graph, Lamai. Now show the new equilibrium. This means after the tax, after the tax on the graph. Now, Lamai, I told you, we discussed that if unit tax is imposed, your supply curve shifts to the left side by the amount of unit tax. Supply curve shift to the left side by the amount of unit tax. Kalana, how much unit tax here?
10.
10, Lamai. 10 means, Lamai, remember, your supply curve shift to the left side by 10 rupees. Vertical distance should be 10. Here, Lamai, how much the value? Minimum, the value is 10. This point moves upward, Lamai. Right? This the point going upward by 10 rupees. The vertical distance. Mean, Lamai, this is the ending point. Okay, the Lamai. Then we can say this point, Lamai, 100 at at price 20, demand is 100. Sorry, supply is 100. This point also. Now, Lamai, suppliers are willing to supply 100 units, not at price 20. This point also, is moving upward by 10 rupees. Kalana, are you okay?
Yes, sir.
Okay, the lama. Every point. Example, this point even. Okay, suppliers are willing to supply. My graph is right. Every point lama shifts to the left side by how much? The amount of unit tax. Clear the lama. Then you can connect these 2 points. Sorry, all points together. This is your new supply curve lama. Your new supply curve. You should be able to draw the supply curve lama. You should be able to draw the supply curve after the and show the new equilibrium. Where's new equilibrium lama? Where's the new equilibrium? This is the new equilibrium. This is the new equilibrium. This is the new equilibrium. Okay, the lama. This is the new equilibrium. Okay, the lama. Show it. I'll label this equilibrium as E1. New equilibrium is E. Show the origin equilibrium after the tax. Are you okay, Lamai?
Okay, sir.
Dipna, can you draw the supply curve after the tax by shifting your supply curve by 10 from every point? Yes. Dipna, can you draw the supply curve after the tax?
Yes, sir.
Okay. Kalana, are you okay?
Okay, sir.
Okay. Next point. What is next question? Calculate. Sorry, derive the new supply equation after the unit tax. Now you know the pattern, Lamai, right? Listen carefully. Lamai, this is your original market demand curve, right? What is the equation for this curve, Lamai? QD equals 500 minus 10p. 500 minus 10p. QS original supply equation, which is shown by this green line curve. What is the original supply equation? QS equals minus 100 plus NP. Now, Lamai, demand curve does not get affected. Okay, the Lamai. Here, Lamai, your supply curve has changed. Supply curve has shifted to the left side. So, remember, Lamai, the supply equation also changes. The supply equation also changes. Right? I have taught you how to derive the new supply equation. What to do, Lamai? New supply equation. Question number 4, part 2, part B. New supply equation after the tax. QS equals minus 100 plus 10 into P minus tax. P minus tax. QS equals minus 100 plus 10 into P minus the amount of unit tax. Kalan, how much? 10,
10,
right?
sir.
Yes. 10. Tax is 10. Then my QS equals minus 100 plus 10 into P, 10P plus minus 10 into 100. Sorry, 10 into 10, 100. Then QS equals minus 200 minus 200. All minus, sorry, minus 100 minus 100 minus 200 plus minus 200 plus 10p. This is the supply equation after the tax. After the tax. After the okay, the Lamai. This is the supply relevant supply equation now. QS equals minus 200 plus 10p. The new supply. So that write down these equations on the diagram. QS equal, this is a new supply curve. Equation QS equal minus 100 plus. Okay, the Lamai. Right. Lamai, how much your equilibrium price now? Alan, here price should be how much? And
35.
quantity, Dipna. Equilibrium price, new equilibrium price. I can't hear you. Kalana, how much?
35.
35. Dipna, equilibrium quantity?
150 units.
150. Is my diagram, Lamai, my equilibrium price is less than 35. So, you know, the problems with the scales. Yeah, equilibrium price should be 35 and quantity should be 150. But remember, Lamai, never trust your diagram. Right? You should be able to calculate equilibrium price and quantity using equations. That is the, you know, the very the more accurate source for calculating equilibrium. Graph is also okay, but Lama, if you know the graph is something, right? Graph has a something, any small mistake, Lama, your equilibrium price might change. Both price and quantity. Okay, the Lamai. So next one, Lamai. This next question asks calculate new equilibrium. Am I correct, Lamai? Yeah, calculate new equilibrium price and quantity. Okay, the Lamai. Right. Let's do it. New equilibrium price and quantity part C. Lamai, at equilibrium, no issue. QD equal QS. Now, Dipna, has demand equation changed? Has demand equation changed after the tax? Dipna, has demand equation changed? I
No,
can't hear
sir.
you, Huda. Has demand equation changed?
No, sir.
No. Kalana?
No, sir.
No, same equation, Lamai, because no any impact on demand curve. So original demand equation 500 minus 10p. After the tax, Lamai. Okay. Okay, Lamai. QS. What about QS, Kalana? Can we substitute original supply equation now?
Can't.
No. Why? Now we have separate or new supply equation. Substitute the new supply equation. How much? Minus 200 plus NP. Minus 200 plus NP. Then Lama, 500 minus, sorry, this becomes plus NP plus 10P. 20p equals 700 divided by 20 divided by 20, p equals 35. Okay, the Lama, this is the equilibrium price, new equilibrium price. Then Lama, you can substitute this equilibrium price to demand or supply equation. But remember, Lama, it's better to substitute your demand equation. Why? There are two supply equations, Lama. හරිද ඔය එක්සෑම් එකේ කලබලයට මොකක් හරි වුණොත් එහෙම ළමයි කරන්න පුළුවන් එහෙනම් ඩිමාන්ඩ් කොහොමත් එකයිනේ තියෙන්නේ ළමයි ඒක වරදින්න බෑනේ ඒ හින්දා ඒකට සබ්ස්ටිටියුට් right qd equals 500 minus 10p 500 minus 10 into how much the equilibrium price now 35 rupees Then 500 minus 10 into 35 means 350. My answer is 100. Halana, Dipna, are you okay?
Okay, sir.
Okay. Let me know once you're done.
Done, sir.
Done, sir.
Right. Next question. What is next question, Lama? Calculate the government tax revenue. Am I correct? Yes. Calculate the government tax revenue. Listen me carefully, Lama. Listen. Lamai, now equilibrium quantity is 150 units. 150 units. Here. Equilibrium quantity is 150 units. 150 units. What does it mean, Lamai? After the tax, 150 units are being sold. After the tax, not 200, Lamai. 200 is gone. After the tax, after the imposition of tax, only 150 units are being sold at the market because price is high, Lamai. Now 35. Consumer has to pay 35 rupees. Right? 100, now the sorry, the 150 units are being demanded or sold at the market. Unit tax mean, okay, the unit specific tax. Here tax is 10 rupees on every product produced or sold. What does it mean, Laman? Listen me carefully. Kalana, if 1 unit is sold, how much does producer have to pay to the government? My question is, tax is 10 per unit. If producer sells 1 unit, how much should producer pay to the government?
10.
10 rupees. Very good. 1 into 10. If 2 units are sold, Kalana, how much is producer liable to pay to the government?
20.
20. 10 into 10. Sorry, 2 into 20. If 3 units are sold, my producer is willing to, responsible to pay 3 into 10 rupees to the government, Lamai Dipna. Now, how many units are being sold at the market?
150.
150, Lamai. So remember, okay, the government is looking at the producer selling goods. Okay, the Lamai. Then say, Lamai, I saw you selling 150 units. Give me how much, Lamai? 10 per unit, then 10 into 150. How much? 1,500. Right? Total government tax revenue should be 150 into 10. Lamai. Clear? This is the importance of unit tax. Lamai. Right? Number of units sold into unit tax. That is the government tax revenue. Puta, you can make your own equation. Write down government tax revenue equals government tax revenue equals government tax revenue equals government tax revenue equals unit tax into, write down this equation and highlight it. Unit tax into, you can show these workings on the space given, Laman, right? Unit tax into equilibrium quantity after tax. Equilibrium quantity after tax. Unit tax 10 rupees, equilibrium quantity is 150. Then government can collect how much, Lamai? 1,500 tax revenue. Okay, Lamai, don't say, sir, 1,500, what a small amount it is. No, no. This by practically it might be millions, Lamai. Okay, the Lamai. Government can collect 1,500 million from the unit tax imposed. Are you okay, Lamai? And remember this equation, okay, the Lamai? It's a different color. And this is the equation for calculating government tax revenue. Shall we move on, Lamai? Dipna, Kalana?
Okay, sir.
Okay, sir.
Okay, next one. What is next question, Lamai? Can you tell me what next is? Calculate the actual price received by the producer. Listen to me very carefully, Lamai. Part is going to be critical part. Listen, the actual price received by the producer. Actual price received by the producer. Listen to me carefully, Lamai. Don't do anything. Listen, listen. Right. No. Right. This is your graph, Lamai. Equilibrium price. Then Lama, your sorry, equilibrium price 30 and quantity, I mean original one, right? 200 units. Now Lama, this sorry, your curve shifts to the left side by unit tax. Okay, then new equilibrium price and quantity have come to the market, Lama, come into the market. New equilibrium price 35 and quantity 150 units. Right now, before the tax, before the unit tax, before the unit tax, before the unit tax. Kalana, tell me, how much does consumer pay to buy 1 unit before the tax?
30.
How much?
30.
30 rupees. Good. So the price paid by consumer is called PB. Abbreviation is PB. PB means price paid by consumer at the point of purchasing 1 unit, right? Before tax, consumer has to pay 30 rupees. 30 rupees means the equilibrium price. Okay, Lamai. Before tax, Alana, sorry, Deepna, tell me, how much does producer receive at the point of selling 1 unit? How much does producer receive if 1 unit is sold? How much? Consumer is paying 30 rupees to buy 1 unit before the tax. My question is, how much does producer receive from selling 1 unit before tax?
35
30,
rupees.
Lamai. Yes. What consumer pays goes to the producer as it is, Lamai. No change. So the actual price received by producer is called PS. PS means the actual price received by producer. How much producer getting from the market? Okay, 30. Remember, Lamai, before the tax, if there is no government intervention, right? Remember, Lamai, price paid by consumer and actual price received by producer are equal. No any problem, Lamai. What consumer pays directly goes to the pocket of the wallet of the producer. No issue. After the tax. After the tax. Now, Kalana, tell me, how much does consumer pay to buy 1 unit after the tax? 30?
35. 5.
35 because equilibrium price is 35. Now lamai price paid by consumer is 35. Okay, the lamai. Yes, this 35 at the point of selling this or at the point of purchasing this unit, the 35 goes to producer. It's okay. 35 goes to producer, but lamai producer has to pay. Producer is liable to pay. How much lamai? 10 rupees to the government. Because at the point of this selling one unit lamai, right? Government says, okay, I saw you selling one unit to that consumer. You got 35. Give me 10 rupees back. Okay, the lamai. Give me 10 rupees. Okay, the lamai. Then lamai. Producer getting 35. No issue. Producer gets 35 at the point of selling, but 10 rupees has to be paid to the government. How much the net price received by the producer after the tax? Ipna. Ipna, how much does producer receive net value?
25 rupees.
25. Okay, the lamai. This is called actual price received by the producer after the tax. Clear the lamai? පටල ගන්න එපා. Consumer 35 pay කරනවා. ඒක හරි ළමයි. යා 35 consumer pay කරනවා. Producer එක හම්බ වෙනවා. එහෙම අවුලක් නැහැ. හැබැයි ළමයි producer ට මේ 35 ම තියාගන්න බෑනේ ළමයි. අපි කිව්වොත් මෙයාට ඇත්තටම 35 හම්බ වෙනවා කියලා ඒක බොරුවක් ළමයි. මෙයාට 35 තියන්න බෑ net price. මේකෙන් 10 කාටද යන්න ඕනි government එකට. Clearද? එතකොට මෙයාට ඇත්තටම මෙයා ගාව ඉතිරි වෙන්නේ කීයද? 25 rupees. That is called actual price received by producer. මම හිතනවා clear ඇති කියලා. Clear the lamai?
Clear, sir.
Okay,
Yes,
the lamai.
no.
Then lamai, write this down. Before tax, after tax. Before tax, after tax. So after the tax lamai, PSC equals lamai PB minus is been the price paid by consumer minus tax. Okay, the lamai. Let me know once you are done. On the space given,
Done, sir.
okay,
Answer.
done, good. Putta, can you show the actual price received by producer on the diagram now? Lamai, this is the price. This is the price paid by consumer after tax. This is called PB, Lamai. What? PB. Now, Lamai, producer receives only 25. Okay, the lamai. This is 35 rupees. This is the price paid by consumer after the tax. Out of this 35 lamai, 10 mean vertical distance between two supply curves. Can you remember? Vertical distance between two supply curve equals unit tax lamai. Clear? එතකොට මේ part එක අයින් කරන්න. Clear? Then lamai, this is PB minus unit tax. Then this is actual price received by producer. Actual price received by producer 25. This is called PS. Gap between PB and PS always equals the amount of unit tax. Are you okay?
Okay, sir.
So that show these workings on the diagram, or your original diagram on your original diagram. My original diagram is not clear, Lama. That's why I have drawn another one. Right. 25. How to show it, Lamai? This is your new equilibrium. Okay, the Lamai. Come down. Come downward along this line until you meet your previous supply curve. Okay, the Lamai. මෙහෙම පාරට ඇවිල්ලා මෙතනින් මෙහාට යන්න. Okay, ඒක තමයි equilibrium, sorry, actual price distribution. Okay, next one. What is next question? Consumer surplus, producer surplus, isn't it? Determine the value of consumer surplus and producer surplus after the tax. Consumer surplus. Now, Lamai, tell me what is mean by consumer surplus. You can't remember the equations, Lamai. It's impossible. Unit tax there, then subsidy, price control policies. Okay, the Lamai. There are two price control policies called maximum price, minimum price. ඔයාට ඒ ඔක්කොගේම equations මතක තියාගන්න බෑ ළමයි. ඒක හරි අමාරුයි කරන්න බෑ. ඔයා logic එක තේරුම් ගත්තොත් ළමයි ඔයාට equation එකක් හදන්න. What is mean by consumer surplus? බලන්න.
The maximum price consumers are willing
Willing to
and
pay
able to
and
willing and able to pay, and
the
the
price that
actual
consumer actually pays. The
price.
difference between consumer surplus mean the difference between the price that consumers are willing to pay maximum and the price actually paid by consumer at the point of purchasing one unit. Not one unit, at the purchase, the point of purchasing the goods and services. Here, Lamai, consumers are willing to pay maximum. How much? It means maximum demand price. Consumers are willing to pay maximum. How much, Lamai? 50 rupees, maximum demand price. Now, Lamai, after the tax, Dipna, how much do consumers pay to buy one unit?
35 rupees.
How much?
35 rupees.
35 Lamai. Then Lamai, the maximum price that consumer is willing to pay 50 rupees minus actual price paid by consumer is 35 after the tax, because we are calculating consumer surplus after tax, into how many units are actually purchased by consumers, Lamai?
150.
150. So 50 minus 35 into 150. Lamai, is it triangle? Yes. Yes, it's triangle, Lamai. Yes, it is. 50 minus 35. 35 mean, Lamai, this distance. This is the distance into 150. This distance. Yeah, this is triangle, Lamai. Triangle. Okay, the Lamai. So divided by. Okay. Now you can make your own equation, Lamai. Consumer surplus after the tax equals consumer surplus after tax. Consumer surplus after tax equals 50 mean maximum demand price, Lamai. Maximum demand price minus equilibrium price after tax, or you can say new equilibrium price, Lamai, into new equilibrium quantity. New equilibrium quantity triangle, Lamai, divided by. Okay, the Lamai. Maximum demand price 50 minus now consumer has to pay actually 35 into 150 units are being purchased divided by 2, Lamai. Can you tell me the answer? How much, Putam?
1125.
1000. Tell me, Daru. 1125.
25.
Okay. 1125. Now, Lamai, compare the consumer surplus before tax and after the tax. What happened? Alana. So that compare the consumer surplus and consumer surplus after tax and before tax.
It has decreased.
Decreased, Lamai. Can you tell me why has consumer surplus decreased? There are two reasons. Number one, consumer has to pay a higher price. 30 has become 35. And Lamai, the number of units they purchase also reduced due to tax. That's why consumer surplus has. Okay, next one, producer surplus. Very critical point, Lamai. Are you okay? I've done. Ipna?
Yes, sir.
Okay, Lamai, highlight the equation. Na? Remember, this is the equation for, no need to remember, but when you go through notes, Lamai, will help you. Right, next one. Producer surplus. What is mean by producer surplus, Deepna? Producer surplus. How do you define producer surplus? Producer surplus. Kadam producer surplus kele. Alana. Alana. What is mean by producer surplus? Though?
The difference between the minimum
Yeah, the
supply.
minimum expectation of producer, the difference between the minimum the price that producers expect minimum from the market and actual price received by producer, Lamai. Now remember, Lamai, the many students misunderstand this point. Lamai, now yeah, due to the unit tax, Lamai, the producer minimum expectation or the minimum price expected by producer. Example, I'll explain this for 1 minute. How to calculate producer surplus, Lamai? Producer surplus equals, now Lamai, how much does producer actually receive? Alan, how much does producer actually receive after selling 1 unit?
25.
25, Lamai. Remember, Lamai, you cannot take equilibrium price. You have to take 25. 25. Write down, Lamai. Produces, yeah, 25 minus, Lamai, remember, you have to take the original minimum supply price. Remember, you have to take the original minimum supply price, 10. After the tax, you can see minimum supply price has changed, Lamai. How much? Minimum supply price. It means when you calculate producer surplus, Lamai, you have to use this original minimum supply price, because if there is no tax, Lamai, and also the now the 10 we have reduced 10 rupees, Lamai. We have reduced 10 rupees from the original price received by the producer. Okay, the Lamai. Then, Lamai, we have to consider this price. Okay, not the 20 rupees, Lamai. Not the 20 rupees. We have to consider 10 original minimum supply price. Okay, the Lamai. So you have to deduct 25 minus 10 into this advantage. The producer benefit can be calculated for number of units that they actually sell. Okay, the Lamai. They are selling only 150 units after the tax. 150 units after the tax. Lamai, this also triangle, so divided by, this is the the equation for calculating producer surplus. You can make your own equation. Kalana 25. What is it? Can you give me a name for 25? Kalana 25. What is it? I can't
Supply
hear you.
price
Yeah,
after
actual
tax.
price received by producer. Actual price. Write down actual price received by producer. Actual price received by producer after the tax. After the tax. Minus lamai 10 minimum supply price into equilibrium quantity after tax. Equilibrium quantity after tax. Okay, the lamai. How much the answer? 75. 75 into 50. 70. Sorry, yeah, 75 into 50. 5, 7, 105, 112. Same answer, right? 1100. This is producer surplus after the tax. Producer surplus after. Are you okay with this? Now, I remember here you cannot take 35. It's wrong. The concept theory is wrong because producer is not getting 35. Producer isn't getting 35 rupees. Okay, the Lamai. If you take 25 here, you have to take 10 rupees here. Lamai, some I have seen, not some, many students calculate producer surplus like this. Listen carefully, Lamai. This method also gives the same answer. Listen, now Lamai, normally how to calculate equilibrium, producer surplus? Equilibrium price minus minimum supply price. Students do like this. Now, sir, equilibrium price is 35. I don't care how much producer actually gets, right? Forget it. This is a way of calculating producer surplus, sir. Equilibrium price 35 minus now minimum supply price has changed. Now not the 10. Now supply curve intersects price axis at 20 rupees. So I'll take 20 rupees. And now 150 units are being sold. So this is a triangle, sir. So divided by 2. Lamai, you will get the same answer, right? 1125. But remember, Lamai, this method is wrong. Why? Because Lamai, producer is not getting 35 rupees. Are you okay with this point?
Okay, sir.
After the tax, remember forever, after the tax, producer is getting actually 35 rupees. Sorry, 25 rupees, not 35. So if you take 35, it's wrong. So Lamai, remember to follow this method. Be careful with this price, huh? Okay, the Lamai. Then what happened to producer surplus? Can you compare producer surplus before tax and after tax? What happened? Ipna, producer surplus before tax and after tax. Increased or decreased? Uda, let me know once you're done.
Decreased.
Done. Alana?
Done, sir.
Right. Tell me, Lamai, what happened to producer surplus? Has it increased or decreased?
Decrease, sir.
Decreased. Alana?
Decrease, sir.
Yes. 2000, now 1125. The reason is number one, now producer is getting lower price. Right? He's actually getting lower price than before the tax. It's 25. And Lamai, the other hand, Lamai, producer is able to sell only 150 after the tax. Lamai. due to lower demand. So final lamai, the producer surplus reduces. So remember lamai from consumer's perspective, the point of view, and producer's point of view lamai, tax is not good because both of their benefits gone by producer surplus and consumer have reduced, right? Yeah, there's another one more part. I think it's dead weight loss or loss in economic surplus. Lamai, I don't have enough time to calculate it because another teacher is waiting to take the smart board at 10:30. So Lamai, I'm going to conclude the class, wind up the class. You can do example number 2 as homework, Lamai. Puta, if you have time, try to do it today itself. Okay, so you can the grab the theory point properly. So try to do example number 2. Buddha, I didn't complete only one part of the tax, that's dead weight loss or loss in economic surplus. I'll do it in the Wednesday theory class, sorry, revision class lamai. Example number 2, example number 3. Okay, the lamai, you can complete all other parts except that loss in economic surplus. Okay, the lamai, please go through the note and give a try to complete example number 2 and 3. I think you are okay with tax, unit tax. Are you?
Yes, sir.
Okay. Lipna?
Yes, sir.
Okay, the lamai. Right, I'll take 2 minutes more to summarize the session, lamai. Today we discuss about government intervention, lamai. Yeah, as we know, the price mechanism is good, lamai. Price mechanism is good, it's good, right? It's a good mechanism to solve basic economic problems. So distribute scarce resources among alternative users. But lamai, there are some instances, there are some situations where price mechanism does not do its job properly. Okay, the lamai, sometimes the price mechanism strong is not strong enough to allocate the scarce resources properly, socially and politically or economically. So government has to intervene the free market, lamai. There are mainly in your syllabus we discussed 4 areas. Okay, the lamai, taxes, subsidies, price control, and income stabilization. Starting taxes, lamai, I told you that in this lesson, lamai, mainly we focus on indirect taxes are imposed on goods and services. Then lamai, indirect taxes, again there are 2 parts, specific and ad valorem. Specific tax is imposed as a specific unit, specific amount on the unit produced or sold. Okay, the lamai, ad valorem means a percentage, lamai. Then when it comes to unit tax, lamai, when government imposes a unit tax on the product, your supply curve, only supply curve, demand curve does not get affected. Supply curve shift to the left side by unit tax. The vertical distance between supply curves must be the amount of unit tax. Then lamai, after when supply curve shift to the left side, new equilibrium price price and quantity come into the market. Okay, the lamai, and the government can earn the revenue, tax income, produce a surplus falls, produce a consumer surplus falls, and other main one is lamai, you should be able to calculate government tax revenue. Okay, the lamai, these are the things we have discussed today. Thank you for coming, lamai. See you on Wednesday. Please complete 2 examples given, right? Example number 2. Okay, lamai, thank you for coming. Have a nice day. See you on Wednesday. Bye.
Thank you, sir. Goodbye.
Thank you, sir. Goodbye.
Bye bye.